I am going to show you how I effortlessly turned this into this in a few days with a simple strategy called the momentum line. But pay close attention because this only works if you follow the steps in order. If you skip a single step, then you have broke the chain of information. Now, step 1 is where it all begins. This is where we hunt for direction to confirm whether the price is going on an uptrend or a downtrend. And personally, I like to use the 4 hours for my direction and 15 minutes for entry. But before we go to all that, the strategy is all about the usage of trend line, trend analysis, and then candle bias strategy. Now, what is candle bias strategy? Candle bias can be defined as the art of determining the next market move with the usage of candlestick patterns. All right, let me break it down for you to understand. So, as we all know, every candlestick has a range. Every candlestick has a range. What I mean by every candlestick has a range is every candlestick has an open, has a low, a high, and a close. We've discussed this on our previous videos, right? For instance, the bullish candlestick has an open at the bottom, all right? Then it goes down to manipulate price, which is the low. Then it distributes the price upwards, which is the high, and then it comes back here and then closed over here, right? This is the accumulation, manipulation, and the distributional phase, right? The open of a bullish candlestick is at the bottom, while the open of a bearish candlestick is at the top. Okay, let's go to a bearish candlestick and see this example again. Now, on a bearish scenario, since the market is going down, the open of a bearish candlestick is at the top of the candle. Okay, when it opens, it normally goes up to manipulate price, then come down to distribute the price to its original direction, and then it goes up to balance, then closes. Okay, so on a bullish scenario, the range of the candle goes like open, low, high, close, while on a bearish scenario it goes like open, high, low, and close, right? It opens, makes a high, makes a low, and then comes back to make a close. While on the bullish side, it opens, make a low, makes a high, then comes back to make a close, right? I hope we've understood this concept. Now let's go to the next part. So how does daily bias work? How does daily bias work? Daily bias states that if the wick of the previous candle, now let's use this as the previous candle, this as the current candle, and this as the future candle. Okay, daily bias states that if the wick of the previous candle, this is the wick of the previous candle over here. Okay, so if the wick of the previous candle is touching the body of the current candle, okay, the position of the wick of the previous candle is touching the body of the current candle, which is this one, then it is anticipating that the future candle is going to go to the direction of the two candles, which is the previous and the current. Okay, so if the previous candle is a green candle like this, and then the current candle is also a green candle, and it so happens that the wick, okay, the wick of the previous candle, this one right here, is touching the body, okay, of the current candle, then that means the future candle is also going to be a bullish candle. Okay, so wick to body equal to continuation. Wick to body equals to continuation. But if the wick of the previous candle is touching the wick of the current candle, then that means it is indicating that price, or the wick, or sorry, the candle that is going to form next, which is the future candle, is going to be a reversal. So wick to body equals continuation, but wick to wick equals to reversal. Okay, I hope it is clear. Wick to body continuation, wick to wick reversal. Same applies on the bullish phase. Okay, same applies on the bullish phase. Now on the bearish phase, you can clearly see that the wick of this candle is touching the body of this candle, indicating a continuation on the future candle. Okay, wick to body on the bearish side too is equals to continuation. But wick to wick, let me see another example. As you can see, wick to wick over here, the wick of this candle right here is touching the wick of this candle, which is the wick of the previous candle, which is this one, is touching the wick of the current candle, which resulted to a reversal. Okay, so wick to body both on bullish and bearish is continuation, while wick to wick both on bullish and bearish phase is a reversal. Now this is a perfect example of how bias works. So this is the previous candle, right? And now this is the current candle, and as you can see, the shadow, which is the wick of the previous candle, is touching the body of the current candle, which resulted to a continuation in the trend. Okay, but if the wick of the previous candle is touching the wick of the current candle, then it is going to result into a reversal. Okay, you can use this strategy on a daily time frame, 4-hour time frame, 1-hour time frame, and so on and so forth. Now, having this in mind, how can we apply this strategy with trendline to actually have a precise entry on the lower time frame? This is what we are about to find out. So if you remember what we said earlier, we said the bullish candlestick has an open right here, okay, and a low, which is the lower wick, then high, then close. Technically, the close of a bullish candlestick is at the top. So if you get on your 4 hours, right, as your higher time frame, looking for direction, you're going to see that the first candlestick over here, let me clean all this, the first green candlestick, sorry, has printed a green bullish candlestick, and the wick of this candle over here is touching the body of the current candle. So this is the previous candle, this is the current candle. So we have a wick to body situation over here, meaning that we are anticipating that the next candle that is going to get printed is probably going to be a bullish candlestick. But how can we avoid loss? And how can we wait until the market begins to print a bullish candlestick? All we have to do is to draw a line. Okay, we are going to draw a line at the close of the candlestick. We're going to draw a line at the close of the current candlestick, okay, so that when the new candlestick emerges on the 15 minutes, we can see how price opens, manipulates to the downside, and then starts to distribute. The moment price crosses this line that we drew on the 4 hours time frame, that is where we can consider entering the market to actually follow the candlestick to make profit. Now let's do it. Okay guys, now we have drawn our line on the 4-hour time frame. Okay, all we have to do is to patiently wait for the next 4-hour candlestick to print. But how can we do that? We're going to go back to the 15 minutes. Remember, this line is going to be visible on the 15 minutes. So all we have to do is patiently wait for the next candlestick to start printing, so that we can see the moment that candlestick price is going to break this line over here, make a retest, and that's where we can enter and make the profit. So guys, we are now on the 15 minutes time frame, right? And this was the line that we drew on the 4 hours. All we have to do now is wait for price to actually go down to make a low, which is the lower wick, and then starts climbing up. The moment price closes above this line, we are good to go. Some traders do actually confirm or reconfirm their entry by allowing price to actually test this area over here again. So when it wants to go up, that's when they enter into the market and then make profit. Now let's see what price is going to do. So price is beginning to manipulate, and now price has closed above the line. So all we have to do is to take our entry over here. And then look for a reasonable risk to reward ratio. Now let's do that. So I've got a 1:2 risk to reward ratio. Let's see how this is going to play out. So guys, as you can see, I have took profit on the 15 minutes time frame. This is just as simple as, I don't know, it's so simple that anybody can be able to do this. Okay, so I made mention of trend line, right? What I meant by trend line is, whenever you want to enter a trade on the 4 hours, make sure that the trend aligns with the trend on the higher time frame aligns with the trend on the lower time frame. As you can see, we are on an uptrend on the 15 minutes time frame, and we were on an uptrend on the 4 hours time frame. Let's go back to the 4 hours. So guys, we are on the 4 hours time frame, and as you can see, we are currently on an uptrend. Can you see? We are currently on an uptrend. So what this means is that if your 4 hours is an uptrend, you only buy on the 15 minutes. If your 4 hours time frame is a downtrend, you only sell on the 15 minutes. Then there are other ways, okay, that you can have a precise entry in the market using the MACD technical analysis indicator, which is situated right here, the histogram, the crossover, and then another analysis indicator called the Bollinger Band and RSI. I would love to discuss that, but we don't want this video to get long, so we will have to discuss that on our VIP mentorship platform. Okay, so if you are gonna want to actually learn how to use technical analysis indicators to actually have a precise entry on the strategy, all you have to do is to talk to me on the WhatsApp link that I'm going to leave on the description below, so that you and I can have a talk, and then you get enrolled in the mastery class where you're going to learn more and sharpen your trading skill on how you can be able to use the strategy to actually have the maximum profit you can possibly have on this strategy. I hope this video helps, and I hope you have a nice day.
Look at where you are. Is it where you want to be? Or have you been making excuses, waiting for the perfect time to start? How many times have you told yourself, I'll start tomorrow, and tomorrow never came? This is your wake-up call. There is no tomorrow. There is no perfect time. You either act now, or you stay weak forever.